One of Uber's earliest investors says the billions it spent on self-driving were a waste of money, right? Had this individual had some say in it, maybe you could have voiced this right in the beginning. It's easy to bark afterwards, right? So early Uber investor Bill Gurley said the company burned billions of dollars on self-driving tech. That money would have been better spent on food delivery, he told journalist Eric Newcomer. Now, he doesn't have a crystal ball. He can't look into the future. He didn't see the pandemic. So how can he say, well, it should have been put into food delivery where they're getting where they've had this massive growth spurt. So I think it's just not well thought out that he put that information out there. Uber sold off its self-driving unit in late 2020 as it grappled with a revenue downturn. Uber's food delivery business has been a massive boon for the company as the pandemic sent ride-hailing revenues down the tubes and takeout orders through the roof. One early investor in the company, Benchmark's Bill Gurley, says the company should have committed more investment to food delivery that it instead spent trying to build self-driving vehicles. In an interview with journalist Eric Newcomer in his newsletter Friday, Gurley lamented that Uber dumped so much capital in its self-driving unit called Advanced Technologies Group, ATG. Gurley's firm Benchmark Capital first invested in Uber in 2011. According to PitchBook data, Gurley sat on Uber's board until 2017. We probably burnt $2.5 billion on autonomous. That was a waste of money, Gurley said, adding that in retrospect the sum would have been better spent on growing Uber Eats. However, he said there still would have been major risks to investing heavily in delivery. These ideas where you use capital as a weapon to build liquidity and then emerge out of it later is a really hard and dangerous game. And you need the capital markets to support it. And if we hadn't gone from a frothy market 5 years ago to a super frothy market now, maybe you don't make that gap. Uber has historically struggled to turn a profit. It reported an adjusted net loss of $8.5 billion in 2019, for example, leading it to double down on core businesses and trim some capital-intensive side projects as the pandemic slashed revenues. In December, the company announced plans to sell its ATG unit to the competing autonomous vehicle firm Aurora and its flying taxi program to Joby Aviation. You know, those two were definitely not smart investments by Travis and Dara. Huge shout out to my sponsor Cover, Kover. These gig protection plans start at $7 a month. You get 1 month free with the link below. 24/7 health service, automatic mileage tracking, paid time off, legal protection. If any of these companies deactivate you, wrongfully terminate you, out go the legal letters from LegalRideshare. You can check up all the perks and benefits online. Again, the link is below. So, yeah, please do leave your feedback. What do you think they should have done with the money, with the 2.5? Again, I mean, none of us had or do have a crystal ball. So I find this article rather strange that he's really moaning and groaning and biatching right now, because surely he could have stood up way back as he started seeing these numbers grow out of control. Have a great day. Stay safe out there. And I always appreciate your feedback. Thank you.